co-founder of DVX Ventures, a company that is on a mission to create great companies. Jon has founded and scaled 6 companies, led teams creating tens of thousands of jobs, and delivering multi-billion-dollar revenues for investors. Jon was president at Tesla, where the team grew revenue run rate from $2 billion to $20 billion in 30 months, before becoming the COO at Lyft, where his revenues doubled, and he helped prepare to take the company through IPO. He serves on numerous advisory boards, including Lululemon, where he was active during a turnaround that led the stock to quintuple. Jon is a graduate of Weinberg College and majored in economics, with a lot of time spent at McCormick in engineering, which he discovered too late in his major, but loved. Samara Mejia Hernandez is a founding partner of Chingona Ventures, an institutionally backed pre-seed fund focusing on investing in technology-enabled companies all over the US. Prior to this, she was an investor at Math Venture Partners, an early-stage venture fund where she led investment review, diligence, and execution. Prior to venture capital, Samara worked at Goldman Sachs and was continually ranked top 5 in selling financial products, and started her career in the fixed income, currency, and commodity group. Samara is actively involved in the Chicago tech community and passionate about helping underrepresented groups get into STEM education, venture capital, and entrepreneurship. Most notably, she co-founded the Latinx Founders Collective organization. Samara earned an industrial and operations engineering degree from the University of Michigan and an MBA from Kellogg. Both Jon and Samara have been actively involved in the garage, Samara here in Evanston and Jon in San Francisco. And I love that you're both entrepreneurs at heart. So let's jump right in. My first question for you is, and feel free, whoever wants to go first, we're going to just sort of tag team. Where, when you think about your impactful classes or experiences that you had in school, and how did that lead you to pursue this chosen field that you're in? And I think maybe highlighting your actual experiences would be great, because that's probably what I'm assuming has led you down your respective paths. So we'd love to hear what your thoughts were.
Samara, why don't you go ahead?
Yeah, so thank you. I went to University of Michigan undergrad, but I went to Northwestern for my MBA. And actually my sister, Professor Janice Mejia, teaches the undergraduate engineering course. So if any engineers out there, I've been to her classes and she's been teaching it for the last few years. So my undergraduate experience was in engineering, and the course that I think was the most helpful to get into the path of entrepreneurship was a class called Engineering for Entrepreneurs. And it basically took a bunch of engineers and put them in a room to create businesses around very tough engineering projects, but also projects that impacted the world in a positive way. And so we got a country in somewhere in the world, and we had to look up the raw material that was mainly exported from there, and we had to create a business out of it. We had to pitch it in front of a group of investors, and then get funding for it. And so that was the most impactful class for undergrad, which might be a little bit different from the Northwestern undergrad classes. But also for Kellogg, the class I use the most is negotiations. I'm literally negotiating term sheets and a bunch of all the legal stuff with my fund, with companies I invest in. I use it every single day. So that's, I think it's a little bit surprising to people, because they think it's financial modeling or, a heavy kind of marketing class or something like that. No, it's negotiations and engineering for entrepreneurs.
And I love how you always talk about your sales experience, because you're really good at, selling yourself. So, and you can talk more about that. But anyway, Jon, we'd love to hear from you.
So there was a similar class at Northwestern that just started when I was an undergrad in the engineering school, and it was just called entrepreneurship. And we broke down into groups of 4 and started companies. And literally one of the guy that was leading the team I was on was a Kellogg. It was a Kellogg's second year, and I think he still may be leading the company that we wrote the business plan for. Like it's just been amazing. It was an industrials company. But I think the most impactful experience for me in undergrad was actually because I was at Northwestern, but it was off campus, and I had to work in college to help pay the bills, and so I got a job down at the Board of Trade and Board of Options Exchange coding and sitting at a trade desk and coding trading algorithms for derivatives trading. And that was probably the most seminal experience for me because I was doing hands-on computer science. It helped me get a bunch of credits at Northwestern, but it also threw me just directly into the financial markets and to kind of how you build tech that can really matter to people. And so while I was at Northwestern, in doing that job, there was a crash in the market and there was a huge liquidity crisis. So imagine Robinhood times 1,000. Like every firm has to go raise money because nobody has enough money to open the next day. And the software that we were writing actually enabled all these firms to get liquidity so that they could open the next day and so the financial markets would be stable. And so I remember walking into an economics class like a few days later, and the prof was talking about how markets are rational. And I like sheepishly raised my hand and said, I don't think that's actually true. In fact, I just lived through like 72 hours straight of what happens when the markets aren't rational and start to melt down. And so like, I think that experience taught me a lot about work. It taught me a lot about tech, and it taught me a lot about how the financial markets work in practice.
Well, that's awesome. Thank you. And for the experiential part of it. So I guess, one of the things our students are always thinking about is that internship or that first job, right? Like where do I start? So can you kind of explain what you did right out of undergrad or grad, and was it exactly what you were looking for? And I know one thing that people find helpful, especially in entrepreneurship, is having a mentor. Did you have one? Where did you find them? So Samara, I would love to hear.
Yeah, so I studied in industrial and operations engineering. So my first two internships were in engineering. And I actually I've never had the highest GPA. I've never had the highest GMAT or ACT or anything. So on paper, I never looked like your ideal candidate. My name was different. My GPA was not there, right? So like I was never, if you saw my resume, you wouldn't have chosen me out of 100 resumes. So to your point, Kristen, about sales, I was actually a very shy person growing up. So I might have mentioned this, but I came to this country as an immigrant. I didn't speak English growing right away, so I had to learn that. And so I always was shy in classes, but I picked up math very quickly. And so my first job in high school was to work at a hair salon as a receptionist, and I was terrified. I was literally terrified to talk to any person. I would sweat. I would like almost cry in tears because I don't want to talk to people. But it forced me to talk to random people, ask them about their day for 4 years. And so by the time I got to undergrad, I was an engineer. And as you know, many engineers are smart, but really nerdy and can't always talk to people. And I'm like, I can talk to people.
But
And
they
so,
build things, which is amazing.
right. But they build things. You're absolutely right. But when you can have both, which I didn't realize was also a power of mine, at the time I was just like, I'm not that smart. I don't have a high GPA. I would go to conferences, engineering conferences, and I would go there before anybody else. And I would get people to talk to me before they asked me for my GPA and all this other stuff. And so that piece of it helped me, get in front of people and got me my first few internships. And I say this because my first internship and my first job was on Wall Street at Goldman Sachs. So John, my very first task working at Goldman Sachs was to put on a coat, to go to the Board of Trade and pick up cards. That was awesome. My very first day.
Yep. A runner.
So
perfect.
Yeah, right. So we have a little bit in common there. But the way I got that was actually going to some of these events and practicing over and over again, being there before anybody else, right? Saying, okay, I might not have the best toolbox, or skills in my toolbox. Well, what do I have? How can I be competitive? And so I used what I had, and I have a pretty good story. It's not that I'm selling to sell, but I got a first meeting, and that's what got me to internships. And so that's what I would say helped me. And early on in my career, I got lucky enough to find people that wanted to help me and wanted to bring me up. And I think, later in your career, as you progress, you're kind of in between. You're trying to help people get up, but then, other people are helping you, and there's less people on top that kind of help you up. So, or that, do that as much as they do for when you're younger. So absolutely mentors, I found mentors that helped me, and I'm very grateful for that because they were the ones that pulled me in and said, you can actually do this, as opposed to me saying like, oh, I don't know if I can do this. And they exposed me to roles that I would have never thought of.
It's amazing when you have someone that believes in you, because I think everyone needs that, no matter what age you are. So Jon, thank you, Samara. Jon, we'd love to hear your take.
Yeah, I think mentors are a secret career hack. And there's vertical mentorship where you're being mentored by somebody who's further down the path than you. And I also like to think about horizontal mentorship, which is people that are kind of in the similar situation that you are. And so in terms of the vertical mentors, mine really started at that internship that I talked about while I was at Northwestern. I got like 3 mentors that were fantastic. And by the time my senior year rolled around, they knew me because we'd been working side by side. And when I started to think about like what I was going to do career-wise, one of the options was to stay there, but I didn't want to be a trader. I didn't feel like that was a kind of a career that turned me on. And so they started to just pick my brain about like what I liked, what I wanted to do, et cetera. And one of them had an insight. They said, hey, Jon, you didn't grow up in a business family or around a dinner table where people talked about business, and you got a lot to learn, which was true. And they said, there are a couple of places you can go to learn a lot and get exposed to a lot in a really compressed period of time, your first few years out of college. And I said, what's that? And they said, well, the choices are either investment banking or consulting. You're going to see a lot. And if you really want general business beyond finance, learning how to run operations or run sales or run strategy, et cetera, you might want to think about consulting. So they actually guided me to think that through. And it was a challenge because things are different at Northwestern now. But when I called Bain and McKinsey, they said, oh, we don't hire out of the Big Ten. That was their answer back then. They said, we only hire out of the Ivies. So then I had to talk my way into like getting interviews at those places. The way I was able to talk my way into those interviews was to reference my internship. And so I'd ask them, I would say things like, I bet you do not have any other applicant that's done a $10 million currency trade today and has hedged it. And it's actually hedging it across a $100 million series of trades today and a $1 billion portfolio. And they would say, absolutely not. And so like it became a hook for me to get an interview. So I got interviews and I ended up at Bain & Company, first Big Ten hire for Bain, and came in with a bunch of folks from the Ivy League and got another mentor. I was super lucky. I actually got 2. And one of the mentors was really helpful. In my first week, he sat me down and he said, where do you want to be in 5 years? And I hadn't really thought about that before. He said, well, think about it. We'll have lunch again next week. Had lunch the next week. He said, where do you want to be in 5 years? I sort of described it. And he said, great, let's work backwards. I want to give you experiences that will lead you to your goal in 5 years. It turned out that this guy did this for everybody that worked on his teams. And it's one of the lovely stories of a guy named Mitt Romney that you now hear in a completely different context. But he was my first mentor and boss. And he did that for everybody around them. And people would go through a wall for that guy because you knew, as you said, Kristen, he was on your side. Mm-hmm. He believed in you and he wanted to help you be successful. And he was systematic about it. It was awesome. And so I now know dozens of people who are CEOs partly because of the training Mitt provided for them.
Mm-hmm. Thank you both. That's great. I'd love to just kind of circle back to your time at Northwestern, Jon, obviously as an undergrad, Samara, you as a graduate MBA student. Just can you tell us about any student groups that you joined, or, did you reach out to alumni during your time, as a student at Northwestern, or companies directly? How did you learn what to do? Like the hacks, like you said, Jon, just Samara, we'd love.
Okay. Yeah. And I can talk about it from University of Michigan because I believe that there's the same groups at Northwestern.
Perfect. Yeah.
So I was part of the Society of Hispanic Professional Engineers. So it was a group that was Hispanic engineers, and we all studied together. It was a community for me away from home, which was really important to me. And so I quickly was very involved with with the organization, and I became president of the organization. And that was really important to me because it also said, okay, you know what, I may not have the highest GPA and whatever else, but I have these other skill sets and leadership skills, right? And I could manage an organization, an undergraduate organization at the time. And that involves everything from fundraising to corporate development to signing up members. And that was a very crucial experience for me to also connect with and lead an organization where you don't have money or promotions. And I read this book called The Irrefutable Laws of Leadership, where it talks about that. When to know your true leader is like is to run an organization that where you can't pay or promote. So that for me was transformative. And then it also helped me get my first jobs at GE and Goldman Sachs because they actively recruited at these organizations. And what I've realized is that, you know, when they went to these organizations, these events, they were looking for a specific type of undergraduate student. And it wasn't like you were just put in a resume in a room full of a bunch of people. So that was a big organization that was one. And then the second one was I was a part of a Latina sorority, Lambda Theta Alpha. So it was, for me, it was again another home away from home. And interestingly enough, many of the women in the organization were also engineers at the time. And so for me, engineering was hard. That's all I did all the time. And so I was involved in two organizations that helped support me throughout my engineering journey and help me get jobs. And some of them are my closest friends still. And I really think it's just so important to have this community around you to help and support you to get you to that next stage in your life.
Thank you so much. That's awesome. And yes, the Society of Hispanic Engineers is run through the McCormick School of Engineering. So it's an amazing group. So love to hear your thoughts, Jon.
I got it. There was a precursor kind of the garage, and there was just a bunch, or maybe not a bunch, a handful of us undergrads who were interested in starting businesses that would get together. And we found that there were a few Kellogg alums who had started companies and were still in the Chicago area. It launched their companies in the Chicago area. So we reached out to them, and we do kind of a monthly kind of beer meetup with a local Kellogg entrepreneur who would walk us through maybe their headquarters or their factory and describe like how they got started. And that for me was tremendously helpful because it was inspiring. You could see somebody that really started from a business plan and a piece of paper and made something, and it was and you could see that it was doable. And so that was probably the most impactful kind of interactions I had.
That's awesome. Thank you. I think, well, the reason why we're here today is they want to know, you know, students want to know, how did you get into angel investing in startups and venture capital? So we'd love to kind of pivot to that. You know, the media portrays the industry as one thing, but what's it really like? I mean, it's a high risk, you know, and, you know, is it better to be an investor or an entrepreneur? And which side is harder to break into? I can repeat some of those, but Samara, take it away.
Yes, I mean, in undergrad, I don't know if venture capital was in anybody's vocabulary. So now I have students going into undergraduate programs, reaching out to get an internship, it's crazy. But at the time, that's not what anybody talked about. And so when I got exposed to it was at Northwestern, getting my graduate degree, getting my MBA. And even then, I was the only one recruiting in my class. I don't think anybody else was recruiting for venture capital. So I actually took a class called VC Lab when I got my MBA, when I was getting my MBA. And I applied almost by accident because I was like, I don't even know if this is a thing for me. And I was able to do an internship at a local angel group here, which I absolutely fell in love with because I was used to the public side of things, which is a very different way of investing, and moving to the private side where you literally have at the early stage. So you might not even have a product yet. You might have a prototype. You might have any revenue. You barely have a website, and you have to make decisions. And here I am with an engineering background working on Wall Street with a lot of data. We use all data. We use very little emotion to make decisions. And you're going to early stage where you're using a combination of the two. And you have very little information. So a lot of it is assumptions. But I fell in love with early stage investing, and I graduated. And I always say this, I graduated without a job, which is important because I have a lot of interns from Kellogg who are like freaking out when they don't have jobs and there's this bubble. And it's important in undergrad or in graduate school where you see other people getting internships and jobs, and you really want to just focus on like, is this right for me? Does this make sense? And so I graduated without a job, but I continue to, again, this is from my sales experience. I would go up to random entrepreneurs or VCs and say, do you need help with anything? And so I was able to get some experience there, and I connected with somebody that connected me to somebody that connected me to somebody else, that eventually I got exposed. I found the local fund here in Chicago that just so happened to have a job opening, because at the time there was 0 job openings on NBC. They historically didn't publish it. Now they're starting to publish it a little bit more. But one thing I would say is that when I applied, I don't have a traditional kind of VC background with operator experience and all that, but I applied, and the partner called me and said, hey, just hold on, just give us a few more days. We're getting through the candidates. And then again, using my sales experience, I was like, well, who am I competing against? And so they gave me the profile of everybody I was competing against. And I said, okay, well, do any of them have sales experience? Because their whole thesis was investing in companies that have an unfair advantage in customer acquisition. And so they said, no. I'm like, well, I have, and I've sold during the financial crisis, and I was top 5 in sales. And so I can learn everything else. And so somehow I convinced them to hire me, and was able to join on early. So that's how I got into it. But, my background hasn't been have a traditional operating background. And I always felt self-conscious about that, because everyone says you should have an operating background to be a good investor. And there's a different level of empathy. And I'm sure Jon can talk about all that. But, I actually looked it up. There was a report on Crunchbase that out of the top 100 VCs of all time, 60 of them had no operating experience. They had finance experience. So I'm like, okay, so there's something to that. And I looked into it. And when you run a fund, people think you kind of just look at companies and that's your role and that's it. And there's so much more to you're a fund manager, essentially. You have to go out and fundraise. You have to manage the fund. You have to think about your cash. You have to think about valuations. You have to think about dilution. You have to think about a bunch of different stuff that goes into a business, and also looking at companies and analyzing them. So I say all this because I think it's really important to say that there's not a traditional path. That wasn't my traditional path, but for me, being an investor is what I love, and I want to continue to do for many, many years.
That's awesome. That speaks to sort of the passion question, something you want to do 24/7. So Jon, I know you obviously have the operator experience. We'd love to hear your thoughts.
Yeah, so I spent a few years of Bain Consulting, and then got lucky and spent a few years at the early stages of Bain Capital when they were essentially a venture fund. I one day was walking down the hall after a pitch session where entrepreneurs were coming in to pitch to us, and Mitt turned around and I said, "What'd you think?" And I said, "I think I want to go back to the office with those guys." And he was like, "What?" I said, "Well, I think I want to go back to the office with it. Like, they're doing some really interesting algorithms similar to the stuff I coded in college, and I think I could be helpful." And he spun around. He said, "You should listen to that." And I said, "Listen to what?" He said, "That signal." I said, "Okay, what signal?" And he said, "I found in life that generally people are either investors or operators. Rarely are they both. And so if you're hearing the call of the operator in the form of being an entrepreneur, you should listen to that." And I remember going back to him to talk about that. He's like, "I want to talk to you about this," because Bain was going to pay for me to go to business school. And it was just a month away before business school was starting. And so if I was going to choose the route of the entrepreneur, I was going to give up a lot. I was going to give up Bain paying for that. But decided I wanted to do it. And it was gracious, super gracious. He was like, hey, if you're gonna hop out and start something, we want to be a part of it. So we'll just give you every business plan that is too small for us, and find one you like, and we'll pass the hat amongst the partners and get you started. And so I jumped out to be an entrepreneur just about 4 years after leaving undergrad, and have never looked back. I've started 6 companies from scratch, gotten lucky enough to scale them and sell each one of them, and then got a really fun chance to operate at scale at Tesla and Lyft and Lulu. And so for most of my career, I was on the other side of venture capitalists. Venture capitalists were supporting my business. They were in my cap table, but I didn't. But I wasn't a venture capitalist in the sense that that Samara is, or even close to it. I did a bunch of angel investing, which I've really enjoyed. But as I was coming out of Lyft, I had this notion for a long time that after starting and scaling 6 companies, there was a pattern and a way to do that. And I wanted to create a firm that would create. I wanted to create a company that would create companies. And so we've launched a hatch platform. We, like a VC would raises funds, we've raised a fund, but we only work on our own companies. And so we've got our own set of crazy ideas. We've got our own set of engineers that builds the MVP. We've got our own go-to-market team that takes those products to market so we can start the feedback loop. And then once we get traction, we form a company, hire a team, and help scale it. And so we've got a team of about 30 people in our firm, amongst engineers, go-to-market people, scalers, really experienced execs. And so we're a little bit different kind of a model. It's a model that has seen some success, but it's unique still. So we follow the model, a similar model like the flagship pioneering has proved out over the last 20 years. Flagship from Moderna right now. Mm-hmm. Or Sutter Hill is another platform that looks like us. They've been doing this for 20 years. You might know of Snowflake or Prism or Pure. Snowflake is the most valuable venture capital investment of all time. Came out to a $71 billion market cap a few months ago. And so we feel like we're in a space where there's some practitioners that have been doing this, but it's still rather unique, and it's not pure venture, and it's permanent funds. So we look a little bit like Berkshire Hathaway in that we've got a permanent operating company, and we own a super majority of these companies over the long haul. So that we're not aiming to own 10 or 20% of a company and take a carry. We're actually aiming to own 60% of the company and take 100% of those returns.
No, can you give us a sneak peek, or is it still in stealth mode of what some of those companies are, or just
totally? Yeah, no, totally. Several of them are out. So one was it's a team that started this business at Tesla. They turned it into a $300 million business in 12 months, and then we thought the TAM was much bigger than Tesla. So what they discovered was that consumers were up for a subscription for somebody to come to their home or their office and maintain their cars. So you never have to go to a dealership or a mechanic again. And so that product has been live in the Bay Area for the last 6 months. It's been scaling awesomely. And so we just hired a CEO, and we're expanding markets for that business. Second business is a pricing optimization platform. Most retailers like a Lulu or an Amazon don't have the kind of pricing science to price to the kind of elasticities that customers are willing to pay. Most e-com competes against Amazon. Amazon has a team of 150 PhD economists who've written unbelievably effective algorithms to help them price. And so we're bringing that capability on a platform to non-Amazon retailers. And the third business is called Loop. And it's a business where for first-time parents, every 3 months of the child's development, they provide a kit, stroller, bassinet, up to learning and development and all kinds of things. And these people essentially subscribe and rent those kinds of products as they need them until their child grows out of them. and we get basically 2 or 3 rentals, and then we donate those to families in need. And so so we're generally focused on stuff that touches consumers. And we've only been doing this for 6 months, but we've launched 3 companies so far, and we've got 6 more underway. So it's super fun. I get out of bed every day and I'm having a blast.
That's awesome. Thank you. I'd love to hear just from Samara too, what your elevator pitch for Chingona Ventures, what are you building there? And, we'd love to hear your story as well.
Yeah. So the reason why I launched Chingona Ventures is because I saw some opportunities in the market. And so when I was at my last fund, I was there through Fund 1 and Fund 2, and I would see the same types of kind of business models, founders getting funded. And some of them had really great businesses, but they just didn't have a network. They don't have the pitch. They might have gotten early validation, but they would get passed on time and time again. And so they experience the fundraise process very, very differently. So I joined in 2014. So this is before the Me Too movement. This is before the recent racial equity movements that have happened over the last year. And I saw an opportunity, even being in the Midwest, so outside of San Francisco, where there's less friends and family rounds, there's less of an angel network here. It's growing, but a lot less of early stage capital. So I wanted to go in earlier and go in business models and with founders that were often undercapitalized. And so I launched the fund where I literally were the first check-in pre-seed deals. And we look at businesses that are changing the world. And I love some of the businesses that Jon, talked about. And there's some similarities in my portfolio, but there's one in particular that kind of ties into what Jon was saying. And then I like to look at a lot of different businesses, but fintech's one of them. But femtech is another. Anything to do with female health and wellness. And so just today, I signed paperwork for a company that I'm investing in that's helping women look at be able to identify cervical cancer at home. And that's the first start, but then be able to take control of their own health and be able to leverage that research or that data and to be able to identify other things that right now, when you go to a doctor, they can't easily identify. And now, I'm a mom of a 2-year-old and going through the entire process, there's very little support for new moms. And so, especially women of color as well. So they're focusing on that area. And then also I just invested in a company in January that helps with meditation and helps with resources for new moms as well. And it was a woman of color that led that company. And so for me, it's really important to invest in these undercapitalized markets and founders and create the next generation of investors that look like 99% of the US population. And so that's why I launched my fund. And maybe there's a way I can co-invest in some of your deals, Jon.
God, that'd be awesome.
That'd be beautiful. I'd love to hear, Samara, just what it's like to be a woman in venture capital. It's an industry dominated by men, of course, but they're so welcoming of women, hopefully nowadays. But I'd just love to hear, because we just, it should be open to everyone, right? So.
Yeah, it's kind of, I'm just growing up here as an immigrant in a classroom and someone that didn't speak English and someone that didn't, being a woman in engineering, being Latina. So I've always kind of been not the majority. So I don't know what it means like to be the majority. But you kind of, I've had some incredible mentors, and incredible mentors have been white men that have taken me under their wings and built, and helped me through my career. And it's also been women and racially diverse, mentors. And so I was very fortunate in that sense. But before the kind of Me Too movement and some other movements, I would say it was a little bit different. And, you get asked to do things that your colleagues don't get asked to do. And so you have to just kind of work differently and harder. And I've always spoken up about it, not because I just thought that, I just shared my experience. And so this was, again, pre any of these movements. And I was able to have founders come to me and share their stories, and investors share their stories, and create a community around that. And so for me, it's really important, again, this is first an investable opportunity, but to back people that have really great business ideas, but they might not have the network, or they might not look like a, successful founder or what it has looked in the past, but that is changing. And there's a lot of support that we have from all different kinds of backgrounds. And so I'm really excited about the future. And then I just use my past war wounds to just be passionate about what I do, and wake up every day and invest in these incredible founders.
And just to sort of a segue on that, on Northwestern, all of entrepreneurship and innovation is actually run by women. So Linda Dara at Kellogg, Esther Barron at Pritzker, Melissa Kaufman at The Garage, and then Julio just hired Hayes Ferguson to run Farley Center. So it is, it is changing. It's kind of exciting to see that. So I guess just moving on, what advice do you both have for networking in the tech industry, particularly now in sort of this virtual world? Samara, you're involved at Techstar Chicago, Jon, Harvard iLab. Just kind of wanted to pick your brains on, to kind of see how to get in there, especially virtually, which is harder. So, Jon, maybe.
Sure. I think hopefully we're almost out of this virtual world as a majority of our interactions, which is great. So it'll get a little bit more back to normal once we've all been jabbed. My big learning just is I think you've got a big advantage if you're curious about people, because that's essentially what networking is. You're getting to know people. And one of the hacks of conversations that is super effective, that I'm sure you all know, is that if you ask somebody questions about them, you can keep a conversation going for a long time, because people are really passionate to tell their story. And so I think the networkers that I've been around that are really good at it just are innately curious about people, love to hear people's stories, are proactive about pulling those stories out of people. And then lastly, this is something I learned from watching a very close friend of mine who had this reputation in Silicon Valley for being incredibly helpful, but not wanting anything in return. And I think that's also a great way to network, because you can network transactionally, where I'm trading something that for something you're giving me. But it's in its purest form. There's real help that we can give each other. And so I think that's the kind of networking that lasts for decades. So when I was launching this DVX that we've just launched, I called up Reid Hoffman, one of the founders of LinkedIn. And Reid is prolific in the Valley for companies he's been a part of. He's part of the PayPal mafia and part of the original 5 that started PayPal and then did LinkedIn and has done a bunch of different stuff. He's at Greylock. I said, Reid, I'd like to bounce this idea off you. He said, fine, come in on Friday afternoon. Let's do it for 2 hours. And I was like, you don't have that kind of time. Like, let's just do it over the phone. He's like, no, come in for 2 hours. And so I went in and we kicked it around. He was super helpful in helping me hone my idea. And at the end, he said, I did this. I said, why? He said, we both shared this friend that had this reputation in Silicon Valley for being this total giver. His name is Goldie. And Goldie's passed away, unfortunately, a few years ago. He said, I did this in memory of Goldie. Like, this is what we're supposed to do, right? We're supposed to be helping each other out. And Reid holds that time in his calendar every week to help entrepreneurs with no payback expected. And so I think that kind of networking is super cool if you can just lend a hand to each other as you're networking.
It was Goldie. Was this Cheryl? Okay, yes. So that's fun. That's awesome. I know Jon knows Cheryl. That's incredible. Sandberg.
Well, she married my best friend, and so she's
So I mean, anyway, one exciting thing you mentioned. So Chingona received a pretty hefty investment. I'll let you share, Samara, from PayPal, right? It was, I think, this fall. So that's kind of exciting. So I'd love to hear your sort of Chicago story, Samara, and building that bridge between Silicon Valley and Chicago. It's a fun thing to think about.
Yeah, just having a fun here in the Midwest outside of, the tech kind of core ecosystem historically is kind of rough, building a company or building a fund here. And so for me, I was very intentional from early on getting co-investors on the coast, investing outside and inside the Midwest, because I saw the need at my last fund of companies raising money early on and then not being able to get funding on the coast. And so for me, it was really important. And for some reason, I think, well, I know, but outside of the Midwest, they're more risk seeking, I guess, because they've done it before. To John's point, like they've done these businesses over and over again. They exit, they have the playbook, they invest in the next company to exit that playbook. And so in Chicago, we're not there yet. So it's important to bridge that gap. And yes, PayPal Ventures committed to my fund in the fall, and that literally kickstarted my raise. And then I was able to raise from my two anchor LPs and then some others. So I'm about 80% of my fundraise for Fund One, almost complete. We'll see. I need to draft the docs and all that. But to John's point on this, you need people to take a risk on you before anybody else to look at you and see some potential, see something in you. And that takes a lot of work, obviously, and a lot of time. But I had that throughout my career. I had that with my anchor investor in my first fund. PayPal was the one that said, I don't care who else is in, I'm coming in and we're going to kickstart your raise. And so that's what I've seen, building in the Midwest. And I'm still growing and I'm still building, and it's a lot of work. But I also, what I've done over the last few years, I also have office hours on Fridays. And so for the last 6 years, for 2 hours, we have office hours. Anybody that wants to get into VC or has a business idea that they want to talk through, which I think is really important, the give first mentality. But also I've had interns for the last 6 years, and many of them have gone on to start their own companies, to launch their own or to work at venture funds. And so I'm very proud of that. And I always have a mix of different backgrounds, genders, experiences. I just hired on my full-time associate, who's I think the only other Latina woman in Illinois. And so it's all about kind of bringing it back into the ecosystem and investing your time and your resources into these next generation founders and investors.
That's awesome. That leads me to, I know that one thing students are always thinking about are you hiring? So what do you typically look for? The majority of these kids have like sort of a liberal arts background through Weinberg, but there are sort of engineering. And so, they're on the hunt right now. So, are you hiring, or do you, how?
So for me, I hire interns. I've been working with Kellogg interns the last 6 years. So I have about 2 to 3 per quarter. And then we might be looking at summer interns. I have to see the budget I have to get this fund closed. But once we have that, I will hire interns for the summer.
Jon?
Yeah, we are hiring. We just did, to Samara's point, we just did this really interesting hiring exercise where we tried to remove bias completely from the hiring exercise. So we just hired a couple of associates under our fall team, and we had everybody submit cases up front, and then as interviewers, we read the cases, but we had no idea the person's background. Mm-hmm. And we don't know what schools they went to, et cetera. We just got to see the quality of their thinking as the first stage of the interview, which was awesome. And so we're fairly continually in the market for associates, engineers. Typically, our growth teams have experience, so you couldn't come out of undergrad to one of the growth teams because you've got to have real experience. But we do hire engineers onto our team straight out of undergrad. So yeah, we've got a fairly active careers page. And then for our companies, we're also hiring into our companies in a bunch of different roles. So if you go to our LinkedIn site, you'll see a bunch of jobs, both in our company and on our platform.
Thank you. Thank you both. Well, I want to open it up to the students to ask questions. We have one that came in from Christopher, but if anyone else has a question they'd like to ask, raise your hand. We'd love to hear from you. But Christopher's wanting to know, is it possible and how do you prepare to make a career change from consulting to venture capital? What might that timeline look like?
Well, I think it's definitely possible. I think there are very few people that spend a career in consulting, largely because the two things wear you down: either the travel wears you down, or the gap between recommendation and decision wears you down. And a lot of people leave consulting because they feel like they're ready to then make those decisions, not just make recommendations. And so I think a lot of the skills that you develop in consulting, rapidly coming down a learning curve on a new business or opportunity, rapidly assessing management teams and plans and that sort of stuff, is super handy to an entry-level job in venture, where you're going to be handed a lot of deals and you got to assess them real fast, and you got to know who to call to get maybe some shortcuts to getting the diligence done. But the skills translate pretty directly. The challenge is there's a lot more consulting jobs than there are venture jobs, and so that's a real challenge. But some determination and tenacity can, I think, typically overcome that.
Good to know. Thank you, Jon.
Yeah.
And Trent Daley, I would love to hear your question. If you can unmute and.
Yeah, of course. First off, thank you guys so much for taking the time out of your day for this. And so, yeah, I guess just what I wanted to say, I feel like I've noticed a trend of career paths regarding venture capitalists where, and I know, Jon, you were in this boat where, you go from public sector investment and you transition into the private sector, like venture capitalism, later on in your careers. And you touched on this slightly, but, what are your thoughts kind of on this and the transferable skills moving one to the other, where technical analysis, concerned with valuation, it just provides much less direction, it seems. So
Not 100% clear on your question, Trent. Do you, when you're talking about valuation, can you maybe just flesh that out just a little bit more?
yeah, like I'm thinking in a lot of public sector investment, and like if you just look at Fortune 500 companies, when you're making your kind of decision, if you're a hedge fund and investing billions of dollars, you usually have very healthy financial records to look at. And the technical analysis side of things, I feel in this situation, it leans pretty heavily on how you make your decisions. But, in venture capitalism and these startup companies, that's, an edge that I feel is hard.
So yeah, it is totally different. You're right. And I'm super interested in Samara's perspective on this because she's actively making these decisions too. I'll tell you, like, I look for three things: large TAM, so large addressable market, because I've started companies in smaller markets and you end up doing the same amount of work for a lot less payday. So large addressable market, really attractive gross margins, because there's easy ways and hard ways to make a living. And when I was at Tesla, I was jealous of all my friends in software because our gross margins are 23%. It's a really hard way to make a living. We made $1,000 every time we sold a car, but it was episodic, not recurring. And I'd look over at my friends at Google and Facebook, and they've got like 90% gross margins, and life is a lot easier. And so we look for TAM gross margins, and then we bet on the entrepreneur. There is no substitute for somebody who will, as Elon describes, eat glass while dangling off a cliff with one strand of rope left. Entrepreneurs are very, very evenly divided between those who will not lose and for those who it's a more casual exercise. And we bet on those who will not lose. You're just incredibly tenacious and different, and you can see them. If you do 10 pitches a day, you can spot the one who's got that X factor.
And just to be clear, you still do analysis, right? We talk about the market sizing, the margins, all that, the financial modeling. Even though it's going to be wrong, you have to model it out to make sure you're going to get your return, right? And so for us, you still do that. But the beautiful part that I love about this is that first thing is the founder. You assess them in a very different way. When I analyzed companies at Goldman, it was like huge teams. You you didn't just focus on it. You did focus on the team, but not as much. And really at the pre-seed stage, when I invest, it's really all about the team. And so that's what I really love. And yes, I get to do the other analysis. And the one other thing I would say is that what I appreciated about starting in the public markets and with a much bigger corporate fund or company was that they taught you all of the basics. So it doesn't matter if you were a journalist major or an engineering major, you went through the summer program, they taught you everything you need to know about the markets. You got a mentor, you got 360 feedback. When I went to venture, it was like, where's my feedback? Who's my No, you don't get any of that. No one teaches you any of that stuff. It's literally just like, figure it out. And so my interns joke, I do cap table Saturday. I used to before I had a child, but cap table Saturday where I would just figure out like, how do I model this out to make it work out for me? And so, but I got the basic framework at Goldman for many years. And then when I got into VC, I was able to leverage that and you know, teach myself and find my own set of kind of resources. So I would, that's, I think, why a lot of people start in the public markets, because there's bigger companies and they have different resources, and then go into the private markets later.
Thank you both. I'd love to hear from Charlotte Oxnam. If you could unmute.
Yeah, I have a question for Samara, actually. So I was looking at your investment portfolio, and in the month of December, you invested in a software development company, a meditation app, and a company sounded in monetizing ethical practices. That's like a very wide breadth of startups. So how do you go about not having, unless you have amazing deep knowledge of every single field, but how do you go about deciding and analyzing these companies so quickly back to back that have such different missions and areas of focus?
Yeah, no, that's a great question. I'm a what they call generalist by nature, but I have sector focuses. So fintech is a big one. That's 35% of the portfolio. Then we have future work, femtech, future of learning, and then food. And this is where I see the opportunities. But the ones you mentioned were two, I believe, in financial technology. So even though it was an ethical practices company, there's a blockchain solution underneath it, and so that fit my financial technology portfolio. And then the meditation app, that was more from the female technology perspective. So I have a big thesis on it, and so I had built this over time. We see 1,000+ deals a year, and so we're able to do this, kind of seeing the same types of business models over and over again, and seeing who has traction, who's taken market share, what are the differentiations in the products are. And so this was the first time I was like, oh my gosh, I've seen all these businesses in this space. This is the one that has, you know, the most traction, the most loyal customer base, this virality effect. And so that's why I invested in that company. But yes, I am a generalist, and I know mainly in the fintech space is where my area of expertise is. But when I don't have that, I leverage industry expertise. And so John mentioned that you have to like look at deals, make a decision very, very quickly if you're going to move on to the next step, due diligence, and then leverage your network of experts to get information on their perspective on the product and the industry.
Thank you. Thank you, Charlotte. I guess I want to just go in order here, to be fair. So Ted, you're up next.
Hey guys, thanks for the talk. So my background is a little bit different. I'm a second-year PhD student studying biomedical informatics. So that's kind of my question is, what would your recommendation be to like someone who's maybe in more science and not necessarily like a pure engineer who wants to break into venture capital? Like, what would your recommendation be? And do you guys work with any PhDs who are maybe more science focused, and like, what are their roles look like?
I mentioned Flagship. So Flagship is a Hatch platform that that is just off the MIT campus in Cambridge, and they've hatched 75 companies. So they only work on their own ideas. In 20 years, they've hatched 75 companies. 22 of them are public. 48 of them have been sold, and the rest are growing. No VC has that kind of track record. They are at the very tops of the league tables when institutions go to invest, because they are getting like 7 or 8 out of 10, not 1 out of 15. And they've gotten big hits like Moderna, Indigo Ag, et cetera. But like their teams are made up of people like you. it's all PhDs in biomedical, in biology, biomedical information, and they typically hatch a company with 3 or 4 folks, one of whom has your background. And so I'm actually on an advisory board for a new company they're hatching right now. And there are 2 of the most capable PhD data scientists I've ever seen, including Tesla's autonomy group and Lyft's pricing group. They are off the charts good. And so I think there are, for certain kinds of firms, not every firm, but certain kinds of firms, you'll definitely have an opportunity to be competitive for a position.
Thank you. And I guess I just, for the sake of time, Zach Blank, we'd love to hear from you.
Yeah, again, thank you both for being here. I was wondering, one thing that I've heard from a lot of people is that in an analyst role at a lot of VCs, a lot of work would be in deal sourcing and kind of getting a good basic foundation in deal sourcing. And I was wondering if you guys have any advice on how to maybe get practice with deal sourcing, or kind of what you guys think makes somebody really stand out in finding a great company to invest in.
Samara, I'll let you take that one.
Yeah, well, for me, I always say do the job before you actually do it. So there's nothing stopping you from sourcing deals now at Northwestern in the ecosystem. So what would you do if you were an analyst the first day on the job? You would go out and literally go and find companies, source the web, source your network. And so I always say, what are first develop a thesis. So what do you like? Do you like financial technology? Do you like healthcare? What is it, right? Build that thesis out of, okay, I like this, and then start researching it. What areas in healthcare? What areas in fintech? And then from there say, okay, let's assume I like early stage investing. I like the super early kind of pre-seed seed stage. So go and find companies in the pre-seed and seed stage and get them to talk to you. And I know that's really hard. But again, they get contacted every single day. And I read an article a few years ago on this guy who wanted a job at an early stage company, and nobody would respond to his email. And so what he did is he started contacting potential customers on their behalf and scheduling meetings, or trying to schedule meetings with the CEO. And so by the time he got to the CEO and emailed him, he goes, "Hey, I have 3 potential customers that I have lined up for you. Will you take my meeting?" Right. And so it's like you're providing value add right away. You're figuring out a way for companies to talk to you, because as a VC, I have to do that as well. And then you're sourcing already. So you're doing the job before you're actually doing it. And better yet, once you do talk to the company, write an investment memo. There's a ton of stuff online of examples of investment memos where you can write it and say, all right, this is why I would invest in a company. So if you reach out to me, you're like, okay, I know you like female technology. I've developed an investment thesis around that. Here's the deck. I have 3 companies in the portfolio. I've already talked to them. That's a very, very different thing than, hey, I'm looking for a job for the summer. And so that's what really stands out. Again, I will always take meetings with people regardless, but what really is going to stand out is the ones that go above and beyond.
That's super helpful. And we just hit the 2:00 hour. So here in Chicago. So I know Nicole and Javier, maybe you guys could email me your questions on the side and I'll get them over to Samara and Jon. But I just wanted to thank you all for coming here today. And just to the students out there, please be on the lookout for a Grubhub email where you can get a $20 credit. We typically provide you guys lunch when you come to these things. So next week, lunch is on us. And thank you, just Samara and Jon, for sharing your insights and your passions. I could talk about entrepreneurship all day, but I hope you guys have a great rest of your day, and go Cats.
Awesome. Thank you, everybody.
Stay safe.
Thank you. All right, bye.